on Pi Day, which if you guys didn't know is 314, like pi 3.1415926. On Pi Day, China had its worst stock market day since 2007. The Nasdaq Golden Dragon, which tracks all the Chinese companies listed in America, lost over 11%. Alibaba lost 10%, Tencent lost 9%, and many other big cap companies lost double digits. Now, that isn't even the worst part. The worst part is that the index is down over 75% since its all-time high in February 2021. 75% because of such a massive fall on Pi Day, and the Chinese government actually decided to start supporting their companies and start supporting their economy again. Just 2 days later, on March 16th, the Golden Dragon Index went up 33%. 33% in one day. So now the question is it time for you guys to be buying some Chinese stocks since it is still very, very low? Well, today I'll be talking about the factors that are affecting the Chinese stocks, and I'll be telling you guys what my plans are, so hopefully it can help you guys make your financial decisions. So the first factor is the Chinese regulations. The main reason why China is regulating their tech companies can be summarized in one sentence. No one person and no one company can be bigger than the Chinese Communist Party. Jack Ma, the former CEO of Alibaba, was criticizing Chinese governments as stifling innovations and how other Chinese banks have pawn shop mentalities. And if you know nothing about China, know this. You do not criticize China when you are in China. At least not publicly. You cannot criticize China no matter how big you are. Especially if you are famous, you have even less rights to criticize China because you have more influence. Therefore, within days of Jack Ma's comments, China swiftly canceled Jack Ma's Ant Group IPO, which is supposedly being the biggest IPO in history. But now it's not. Now, let this be clear, okay? China did not just randomly start imposing stricter regulations on tech companies because of one comment from Jack Ma.
If you look at the specific reasons that were given by the government, there was actually, you can trace back like several years of work to regulate this industry, namely consumer credit and small business lending.
The Chinese government is afraid that the tech companies are too big for them to control. So in order to assert their dominance, they pretty much strangled their golden goose and crushed their economy. A decision that cost them over $1 trillion in investment money. Now, after their massive stock market crash on Pi Day, China began to reconsider their regulations, and China financial officials said that the regulatory crackdown on technology companies could end soon. They also plan to support overseas stock listings and build stability in their capital markets as soon as possible. So from what I got out of this, it seems like the regulations will soon be disappearing soon. So in my opinion, not financial advice by the way, it seems that China cannot handle any more pain and they are finally easing up on their economy. Factor number 2, the US is delisting their Chinese companies.
Here's the bottom line. This is a very tough situation. Investors say it's the Chinese regulators who are preventing the U.S. regulators from inspecting the audits, not the companies. The issue, unfortunately, has become very politicized. These companies are all audited by the big four accounting firms, but under Chinese law, regulators are not allowing those audits to be sent to the U.S. regulators. So what you have here, essentially, guys, is Chinese law clashing with U.S. law.
This is not the Chinese companies being shady, right? Although, chances are they are being shady. This is about the Chinese government being purposefully shady so that they can get away with doing shady things. Yeah, it sounds very, very shady. Now, on March 16th, after the brutal crash, Chinese government officials said that they plan to support overseas stock listings, which I think means that they are willing to cave in and they are willing to send over their audits to the US regulators. I don't know if that is true, but I hope that that is true, because if not, this delisting thing could very well happen. 5 Chinese stocks are already on the chopping board to be delisted from the US stock exchange. And while it seems that the tech regulations and the US delisting problem is getting resolved, there are, however, problems that cannot be resolved with a few laws being passed. But wait! This video is sponsored by iTrustCapital. Did you guys know that you guys had to pay taxes on your crypto gains? However, there is one way and only one way that you guys do not have to pay taxes on your crypto gains, and that is to open a Roth IRA. But the thing is, most Roth IRAs do not allow you to buy and sell cryptos, and those that do are very, very expensive. But not iTrustCapital. Business Insider ranked iTrustCapital as the #1 crypto retirement account for low fees. So if you currently don't have a Roth IRA, then you should, okay? You definitely should, because crypto now is going to be exploding within the next decade, and you do not want to pay taxes on those gains. So sign up for iTrustCapital today and get $100 worth of free Bitcoin when you use my link below. Thank you very much, and now back to the video. Factor number 3, China's current problems. The first current problem that China has is their COVID outbreak.
China is fighting the nation's worst outbreak of the coronavirus in the past 2 years. The official number of reported cases is still relatively low, about 32,000 according to the government, but a significant portion of those cases have been the highly transmissible Omicron subvariant known as BA2.
Because of the COVID outbreak, China locked down 2 major manufacturing cities, which forced U.S. companies to suspend their operations, which in turn caused their stock market to have the biggest crash since 2007. The other problem for China is their relationship with Russia. China has maintained that they are neutral in the Russia and Ukraine war, even though the whole world knows that Russia invaded Ukraine. This is because China has a really, really, really good relationship with their Russian neighbor. How good is this relationship? Well, just this year, Russia and China signed a long-term agreement to fortify their relationship even further, stating that they are so close and that the friendship between the two states has no limits. And after the Beijing Olympics, they went even further to strengthen their relationship by saying that there are no forbidden areas of cooperation. So with such a strong backing, it is no wonder why Russia believes that it can take over Ukraine. However, I'm pretty sure Russia didn't think that it would take this long to take over Ukraine. And I'm pretty sure that Russia didn't expect their economy to take such a big hit from all the sanctions. That was why 3 weeks after they invaded Ukraine, Russia asked China to support them in their military efforts to take over Ukraine. However, China cannot just openly support Russia in their war. They might get sanctions from the Western countries just like Russia did. And since they are busy with COVID and their stock market crashing, it is unlikely that they will invite any further problems if they don't need to. But who knows, okay? Crazy people have done crazier things. Factor number 4, inflation. If you guys didn't know, the US currently has an inflation rate of 7.9%, okay? 7.9%. It is the highest that it's ever been since 1982. Now, what does that mean?
Now to those staggering new inflation numbers.
Interest rates.
The Federal Reserve.
Gas prices.
The Fed is probably going to raise interest rates with the goal of tackling inflation.
In most cases, raising the interest rates will cause the stock market to dip. Not crash, but dip, or make it very volatile. The last time this happened was at the end of 2015, and it lasted till the end of 2018. And during the initial increase, it was not pretty. It took 3 whole months until the market stabilized and started to go up again. And at that time, inflation rate was just 2%. Now it is almost 8%.
So what happens when interest rates start going up? Inflation starts coming down, stock prices can come down too, and the cost to borrow money starts to go up. Think mortgages, car loans, student loans, credit cards, all more expensive.
Now, I know that this has nothing to do with China, but the problems of the US are the problems of everyone. If the companies in America are falling, then Chinese companies listed in America is also going to take a hit. So, what are your options? Well, in my mind, there are only two options. Do you invest now or not? Well, if you don't invest now because you think that the stock market is going to crash, and then your money is going to be eaten up by inflation. If you do invest now and the market goes lower, then you might lose even more than the 8% that you would lose from inflation. Well, everyone's situation is different, but I'll tell you what I'm doing. I'm currently dollar cost averaging into the index anyways. However, during these times when Chinese stocks are really low, I'm going to put a little bit of money into these Chinese companies, hoping that they will get through these tough times and get back to where they were before in February 2021. Now, the regulations and the delistings are currently being resolved. Hopefully, who knows. But in the COVID outbreak, the Russian relationships and the inflation rates are not something that they can resolve pretty easily, right? But it just takes time. Now, the only thing is, how long will that take? Well, who knows? But if you guys are planning to hold Chinese stocks like Alibaba for a long time, then right now is probably the best time to buy it while it is still cheap. Alright guys, well, that's my video for today. Thank you so much for watching. And remember, this is not financial advice. Thank you very much, and I'll see you guys next time. Bye.